Welcome to our weekly roundup of key business developments in Sri Lanka. I'm Nishani Pigera, and here are this week's main stories. Policy rates maintained. Inflation to reach 6 to 7% in early 2024 as VAT bites. January tourist arrivals on track for a strong month. In our top story this week, in the first Monetary Board meeting of the year, the Central Bank of Sri Lanka kept policy rates unchanged. Standing deposit facility rates and standing lending facility rates remained at 9 and 10% respectively. The regulatory authority noted that the decision was taken assessing domestic and international macroeconomic developments to maintain inflation at 5% over the medium term while taking note of the taxation and supply side factors. Meanwhile, the central bank has sought explanations from banks that have not swiftly complied with policy rate cuts as mandated by its order issued last year. Dr. Nandalal Veerasinghe, governor of the central bank, said that they are closely monitoring such banks and expressed disappointment that the overall rate reductions have not met the initial expectations. He added that there is more room for lending interest rates and yields on government securities to fall further. Since June 2023, policy rates have been cut by as much as 650 basis points. Dr. Nandalal Veerasinghe said that Sri Lanka's inflation could rise to 6 to 7% in early 2024 due to the VAT increase. In January, VAT was increased by 3% to 18%, with the threshold reduced to 60 million rupees per annum and previously excluded items becoming liable. In recent months, inflation has gradually crept higher, with December prices rising 4.2% from a year earlier. According to Shehan Semasinghe, State Minister of Finance, Sri Lanka is uncertain whether an agreement in principle could be reached with the bondholders by March in time for the second IMF review. However, authorities expect to complete all requirements by the third disbursement set for later during the year. He stated that discussions with the bondholders are a very complex process and that in some instances where bondholders were ready, Sri Lanka had to hold back due to the policy of comparable treatment. Sri Lanka's private creditors account for about 34% of foreign debt, amounting to around $12.5 billion. The Joint Apparel Association Forum states that the apparel orders in 2024 would be the same as that of 2023. Johan Lawrence, a forum secretary, said that the current increment in order volumes will not be carried out for the entire year. He cited global recession and Sri Lanka's competitiveness in the global market as reasons for such activity. In 2023, apparel exports fell to $4.1 billion, down from $5.6 billion in 2022. Sri Lanka Customs stated that it is confident in exceeding last year's revenue of 970 billion rupees, with an expected revenue of 1.5 trillion rupees in 2024. According to Sivali Arukgoda, Sri Lanka Customs media spokesperson, the anticipated increase in trade volume following the relaxation of import restrictions should enable exceeding the target revenue. The Central Bank of Sri Lanka expects private credit to expand by 100 billion rupees in December 2023. Dr. P.K.G. Harishchandra, Assistant Governor at the Central Bank of Sri Lanka, said that since June last year, there has been a continuous expansion in private credit, adding that this trend will continue, reflecting the recovery of activity of the economy as well as a reduction in lending rates. Since June 2022, credit to the private sector by the banks has recorded an overall growth of 174.4 billion rupees. In our weekly tourism update, tourist arrivals for the first 21 days of January reached 142,161. This easily surpassed the 103,000 recorded in the full month of January last year. Average daily arrivals increased to 6,754 from a week earlier. The primary source market is Russia, followed by India and the United Kingdom. The SRTDA is targeting 2.3 million visitors for the year 2024. And now let's take a look at the weekly movement of the All Share Price Index and the S&P SL 20 Index at the Colombo Stock Exchange. At the Treasury bill auction held on Wednesday, yields on all maturities contracted. Bids amounting to 360 billion rupees were received, of which 100 billion were accepted. The Sri Lankan rupee was steady against the dollar this week, with the central bank's indicative mid-spot rate ranging around 319 to 320 rupees. And with that, we wind up for this week. Do subscribe to our YouTube channel at the link below for regular updates on economic and business developments in Sri Lanka. Until we see you again next week, thank you for watching. Stay safe.